Welcome back, accounting students. It's Mrs. Bloomquist, and today we're looking at Lesson 4 from Chapter 9. Remember, now that we are in Chapter 9, we've transitioned away from accounting for sole proprietorship. Lesson 4 deals with accounting for cash payments, and one of the things that we want to remember is that businesses use special journals, and one of the special journals that we're going to be identifying is dealing with a cash payments journal. Okay, and we already talked a little bit about establishing a petty cash fund previously, but now we're going to go ahead and make sure that we know how to replenish the account for anything we pay out of that petty cash. So one thing you want to be thinking about as we move forward to the cash payments piece is to really think about, if you're buying from a vendor, why they might be offering incentives to get you to pay early, and how, as a person that's purchasing for a vendor, you might be able to negotiate for bigger discounts when you buy from people. So the kinds of things that would allow you to get a bigger discount for purchasing, and then why in the world a business would actually offer you a discount when you buy from them. So as we kind of go forward here, the two learning objectives would be recording cash payments using a cash payments journal and recording replenishment of our petty cash fund. So in lesson 4 here, we do have some vocabulary that we want to touch base in. That cash payments journal is a special journal that's used to record only cash payment transactions. And you want to remember that this is for transactions where we actually pay for the purchase when we make the purchase. The other thing that, in terms of vocabulary that we want to kind of dial in on, would be some discounting, and we'll look at that in just a minute. So for the cash payments journal, we can see it right here on the screen, and we would identify that it has not only the general journal columns for the debit and credit, but then it's showing an accounts payable debit, a purchases discount credit, and a cash credit. So our cash payments journal actually has more columns to work with than we're used to seeing. Okay, in terms of trade discounting, there are some special things that go on when we start to purchase merchandise that we're going to resell in our business. One of the things we want to be aware of is a term called a list price. And a list price is the price that's listed in a catalog or a retail site an internet site, that's the retail price or the price that's considered the list price. Most of the time, though, when you're functioning as a wholesaler, when you're going to be buying merchandise that you're going to resell, you're going to receive some kind of trade discount, which is essentially just a reduction from the list price. And the price you ultimately end up paying is your net price. So the price after any trade discount has been applied, that's actually going to be your net price. Now you would want to consider, sometimes these trade discounts can actually be a big amount, and the retail price for an item might be listed at $500, where you'd be getting a 40% trade discount, and ultimately the net price that the business would pay would be $300. Now the price that the business is going to charge the end consumer is $500, and the difference between the two is going to be the business's profit on the sale of those items. So this cash discount, well, as we think about cash discount, this is a deduction that a vendor allows you to take on an invoice to encourage prompt payment. So when businesses are trying to get you to pay before 30 days, sometimes they'll give you a discount to do that, and those discounts are called cash discounts. Finally then, a journal column that's not headed with an account title is called a general account column, and we'll just want to pay attention to that. All right, so cash payment of an expense. Now, we would be looking at a November 3rd transaction where we're writing a check to Kelser Promotions for advertising, and the amount of the check is $600, and it's check 689. So if we're looking at our T accounts, right? So we're looking at a T account, and our debit side of our advertising expense is going to go up by $600. And our credit side of our cash account is going to go down by $600. So as I look at my cash payments journal here, I can see November 3rd, I'm reporting an advertising expense under check number 689. I'm debiting the journal for $600, and I'm crediting cash for $600. Okay, now if I'm buying supplies for cash, I'm going to do this on November 6th. I'm writing a check to Wells Office Supply for some store supplies for my shop. $56.20, check number 690. Again, using my T account, you can see that my supplies is going to go up, so I'm going to have more supplies, and my cash balance is going to go down. So I'm going to go ahead and debit supplies and credit cash. When I write this in my cash payments journal, you can see the date. The account title is my office supplies, check number 690. The debit is $56.20, and then the credit is also $56.20. And notice that I'm posting those credits way over in the cash credit column on the end of my cash payments journal. So cash payments for purchases. Here I'm looking at purchasing merchandise from Polar Refrigeration for cash, $480, check number 697. Purchases are my debit, and I'm going to, my debit is an increase for purchases. I'm going to credit cash, which means I'm reducing the amount of cash in my account. So again, in my cash payments journal, on the 9th, I'm dealing with purchases, check 697. I'm going to go ahead and debit, and that's the general account, and then I'm going to go ahead and credit my cash. All right, so as we transition now and start thinking about paying for things on account where I'm going to receive a discount, a purchase discount for paying early. So the period of time that you can actually take advantage of these cash discounts, it's called the discount period. I know you're shocked by that. And when a company that buys merchandise decides to have that cash discount, it's called a purchase discount. And the account that reduces a related account on a financial statement, we call these contra accounts. And you're going to see an example of it really quick here. Okay, so November 14th, we're going to pay cash on account to Galley Electric for $627.20. And it covers a purchase invoice of $489. Now the purchase invoice itself was listed for $640. However, we receive a discount of 2% for paying promptly. So that discount is $12.80. And the check that we use to issue this is check 702. So my accounts payable, I'm going to go ahead and debit that and reduce the balance of my accounts payable account by $640. My purchase discount is a credit transaction, and I'm going to increase the amount of my purchase discount, and I'm going to go ahead and debit my, I'm going to credit my balance in my cash account, and that means a decrease in my cash of $627.20. So as I look at this cash payments journal, first thing is the date, and then Galley Electric, check 702, and you can see the purchase invoice amount, or the accounts payable piece, is $640. However, the cash discount is listed under the purchases discount credit right here for $12.80, and then the amount of the check is actually $627.20. All right, here's another example. We're writing check number 706 on invoice 468. We're going to go ahead and pay $2,512. So my accounts payable is going to go ahead and decrease. That's my debit. I'm going to go ahead and credit my cash for 2512 as well. So in this case, you see that there's no discount for paying early. So S&R Imports, check 706, I'm just going to go ahead and debit accounts payable and credit cash. All right, now I have petty cash to be able to make small cash purchases where it's just really much easier to buy things in cash rather than having to write a check or deal with that check writing piece. So when I have a petty cash, when I have a petty cash fund, remember that I'm going to complete a report at the end of the month to go ahead and reconcile or record all of the transactions out of the petty cash fund. So you can see that I'm noting I've got some advertising, some store supplies, some miscellaneous stuff, and then I'm over in cash by 31 cents. So I'm going to complete that petty cash report where originally I had $250. I've got all kinds of activities that total $215.13. And when I actually add up the amount of cash in my petty cash box, I'm over by 31 cents. So when I look at what's going on in my cash payments journal, I'm going to go ahead and debit advertising expense, supplies, and miscellaneous, and then I'm going to credit my cash over short account. So that's where I'm going to credit, and then you can see that my cash credit, or the amount I'm going to credit to cash, is actually $214.82. I'll tell you, it's really very, very common for your petty cash to be over and short. So let's go ahead and do the other understanding questions. First of all, net price of an item that is $1,200, the list price, but has a 60% trade discount. Remember, you're going to go ahead and take 60% off of that list price to get to the net price. Why would a vendor offer a cash discount to a customer? The reality is, if you want people to pay quickly so that you have cash on hand to do other things. Okay, so encourage early payment and receive the funds in early. You might have other plans for that cash. What is recorded in the general amount columns on the cash payments journal? Cash payment transactions that do not occur often. What would be meant by terms of sale 210 and 30? So remember, the first piece is the discount. So we would be seeing 210 means 2% of the invoice amount is what you can deduct if you pay within 10 days. Other than that, your invoice is due net 30. So the whole amount is due in 30 days. When journalizing a cash payment to replenish your petty cash, what is entered in the account title column of the cash payments journal? The titles of each of the accounts where the petty cash funds were used, those are the titles that you would enter in, and we did see examples of that. All right, how is cash short recorded in the account cash short and over? And again, you want to be thinking about, hey, am I going to debit or credit? It's a debit if you're cash short. All right, so one of the things you might want to consider as you're thinking about big ideas for this particular section would be, if you're a small business owner, what would be some ways that you actually might be able to negotiate a better trade discount when you're working with specific vendors? So you want to be thinking about that as an idea as you're carrying this concepts in this unit forward. All right, so go ahead and do your forms and then your work together and on your own for lesson 4 in chapter 9. Good luck.